So also we've talked about where we're sort of going, and in terms of next question, I guess is how do we get there, and what are the obstacles that you have to overcome? So Julian, just from a sort of practical point of view, how do you go about setting up a strategy to deal with tech? And
yeah, I mean, I think this is something we come across a lot, and we have implemented some prop tech solutions in our business, and it's been a steep learning curve. And I think I find this a lot with our colleagues in the industry, where they sort of say, "Oh, we love the idea of it, but how do we do it?" And I think for what I've learned in the process is that you've got to start small. You've got to start very specific. You can't take on too much too soon. Keep it simple. So that's sort of the first thing. Then the second thing is, you got to get your house in order. There's no point bringing in, a Re-Leased or any number of the other sort of great prop tech tools out there if the systems and the processes and the data ultimately that they run off is a complete mess. So that's like a massive thing. And I think that's kind of where the property market kind of is at the moment, trying to figure out how they solve that mess so they can bring in the solutions, because the solutions are powerful, but they need a fuel, and that's data. The third part of it is finding really good partners. I'm a big sort of believer in buy, not build. I think that, I'm a chartered surveyor. I'm not a software engineer. And I think that the property market is full of chartered surveyors, and there aren't many software engineers out there. So for now, let's buy, let's not build. But that may well change over time. And I think you've got to find the right partners. You've got to find partners who you can work with. So it's not just buy it off the shelf and then plug it in and sort of watch it and make sort of hope that it works. You've got to find people who you can team up with, and you can mutually benefit each other through sort of development and sort of making each other's products better, because they're relatively property's new to technology and technology is new to property, so it makes sense to work together. And then I think the integrating piece, which we've all been talking about, I think, which is sort of goes unsaid. You need to make it work. Silos of information, silos of systems and processes just do not deliver the results that you need to see. That will make you a better business. And I think ultimately across all of that, you need to be willing to fail. If you're not willing to fail, you'll never go and do anything exciting, and you'll be behind the curve. And the beauty about a lot of this stuff, especially if you buy and not build, is the cost of failure isn't very high. But what you learn out of it is huge. So I think that's sort of the overriding approach.
And then how do you actually measure how you're getting along? I guess from a property point of view, you're very used to assessing how your property investments are performing. How do you assess how your investment in tech is working?
I think feedback and a lot of analysis. It's a constant evolution, and you have to get into the detail and find out where it's not working properly. I think, it's just constant evolution and revolution and trying to innovate really and see where you can make it better, because a lot of these things, they don't work first time round. But they do need to be measured. It is hard. I have to say it's hard when you invest a certain amount of money into a tech product. If you're relatively early in the cycle of people doing that and trying to be a first mover, quite often the sort of return on your investment is not immediate. You have to be looking long term, and you have to have faith. So it's a difficult part.
Obviously, we've seen quite a lot of startups come on the scene in the property sector in the last 2 or 3 years. Almost every week, as I said, I get a press release about one sort of promising to be the next Uber, and they can't all be the next Uber. What do you think the sort of success and failure rate is likely to be in prop tech? Is there going to be quite a lot of churn, and what are kind of the benchmarks of success?
It's quite easy to go out there and get money off an idea, and as I said earlier, they'll have a very limited experience. Like they might have tried to rent a flat and it's taken 3 days to get a viewing, and that's been a real pain at that time. So they're like, I'm going to invent this app which is going to make viewings really easy, and we're not going to need letting agents anymore. But they have no sort of understanding, because they haven't worked within the property industry or with the property industry, that if you want to take out letting agents, they're their only connection to the tenants. And if you want to go and get every tenant one by one, then you're going to have ads in the tube and things like that to reach them. There's just no way to reach them. There's no distribution. So I think for the ones that will be successful are the ones that understand or work with the property industry to trying to come up with solutions that actually are needed or will make a difference, rather than sort of sitting in a garage with some mates who have all had this really bad flatting experience and trying to make something that's cool.
and we've seen quite a few kind of different types of technology company pop up, haven't we? Some sort of doing in the investment markets or peer-to-peer platforms. You've had a lot happen in the property management sector as well. Which parts of the industry do you think tech will make the biggest impact?
Well, as an investor in peer-to-peer lending, I think the whole financial sector is wide open for disruption, as I think probably everyone in the room would agree. But it's really good to see, having worked in a bank, several investment banks and banks in the past, it's good to see them getting it stuck to them actually by smaller companies coming along and actually saying you can't just be in this room as of right. You have to have something that's relevant to people now.
I think some of them will stay on for a very long time doing, because some of these are really massive firms that can sort of survive by themselves for quite a while anyway. But I think, they've survived by having this huge data set to themselves and not sharing it. But now there's going to be a lot of options for people like, say, working with Re-Leased, who are now also going to be able to tap into a massive data set if they choose to. So the way we see it is that we want to provide value to them. So if you share your data with us and allow us to use it, then you're clearly going to get value back from us. And so now they are tapping into, we're giving someone that might manage sort of a few hundred properties access to the same amount of data that CBRE have. It's going to be interesting to see how those companies who have kind of owned it all, how they're going to play going forward, and whether they'll just sort of wrap their arms around it, or whether they'll try and get involved and sort of play with everyone.
Actually, just something's, again, very, very relevant and topical. How many people know of open banking here? There's a few, right? So the UK Competition and Markets Authority did a review of competition and innovation in UK banking, and what they concluded is that actually data at the core is very strategically held by a very small number of banks, and it gives them a huge advantage in the marketplace. And so they've introduced legislation called open banking that means that the 9 biggest banks in the UK now have to stand up APIs that mean that with appropriate consent, regulated third parties can get access to that data. So suddenly you open up the ability to make bank payments from a bunch of different places and access that bank data for things like credit referencing, or we use it within our product. And actually, speaking to the regulators there, I think there's absolutely the possibility that type of regulation will move eventually beyond banking into utilities and a number of other areas, really to legislate to address monopolistic tendencies that are based actually on market presence and on size of customer base, but actually at its core on data. And so I think the whole landscape's really, really interesting how it will evolve.
Interested to get the property perspective on that, because the industry has been a bit slow to sort of share data, hasn't it? There've been efforts for some years to get the sort of banks and lenders to share their data, so we can get a bit of more an insight where that market's going, and the agencies as well are a bit loath to share their kind of leasing and investment data. Do you think that is really moving now, or?
Yeah, I think it's going to change a lot. I think it's an awakening of the landlords to the fact that actually they have all the assets, and the data should kind of follow the assets, right? It's kind of forced what I was saying earlier about having to have your own data under control before you can implement technology. So I think it's a bit of a circular argument, but it's going to happen. And I don't necessarily agree that the big consultancy firms of the world will go out of business because they don't control that data anymore. I think they can still add value. I think they can add value by pooling data. They can add value by analyzing that data, by creating value out of your own data that you didn't realize. I mean, they have the platform, the scale to have data scientists, where there's not going to be many data scientists in property companies in the near future. So I think there'll just be a whole new data analysis sector, really. Will come out of the property market and will be there. But the ownership of the data, the core control of that data, will probably sit more with the landlords. And I think that's a very good thing. I think what I get frustrated, or have been frustrated in the past with the data services businesses, is the quality of their data is very poor. because it's anecdotal largely. It comes through verbal phone calls and oh yeah, we did a letting. It was 3 months ago. I can't quite remember whether it was 100,000 a year or 1 million. It's that kind of stupid stuff. And so we've looked at it and kind of appraised it, and we kind of think they've always been about 50% accurate. Whereas I think when it comes from the landlord's actual data sets, from the property management systems ultimately, then the quality of that data is way, way higher because you're invoicing your tenants of it. And if there's one thing landlords are pretty good at doing, it's making sure that they charge the rent. And so you're going to see better quality data in probably more disparate hands, in my view, but with an opportunity to pull that data through certain sources to create insight.
Just to add one thing, I think the UK has actually been pretty good at sharing data amongst landlords and fellow property owners. We do share most of the fundamental things that are happening, and because of that, the UK is a transparent market, and particularly London. We all know what buildings down the street, what they're renting at, what pounds per square foot they're renting at, and what buildings are sold for, at what yield. And that information, for example, isn't available in New York, I understand, in terms of, it's much more of you need that data to be able to transact. In the UK, the fundamental data is there, and it's always served this country very well, because it means if you come in as a foreigner from another country, you can very quickly come up to speed in this market. So where are you going to mobilize your capital to? You're going to mobilize it to here and not to somewhere else. So I would say pushing against an open door in terms of that means sharing data from systems, and most landlords would say, or property owners would say, that's a good thing.
I mean, I think in the short term, we don't have the skill set. Ultimately, I think there's people coming into the industry thick and fast, and I think people in the industry are kind of figuring it all out for themselves and realizing that there's some opportunity there, and there's lots they can do. But I think in terms of actually making it happen, we need to look externally in the short term. But that may well change. I think the property company of the future may have as many developers as it has surveyors.
Is that what's happened in the finance sector?
Yeah, again, it just sounds incredibly analogous. So most of the banks are standing up digital divisions or digital units, but instead of housing them in Canary Wharf, they're housing them in WeWork offices and trying to get that sort of more innovative culture going. But at the end of the day, they're banks, right? So it's kind of hard. Barriers to entry from a technology perspective are just so low now. So again, I don't know how many of you are technologists, but Amazon has a proposition called Amazon Web Services. Microsoft has something similar, where effectively instead of having to kind of build out a data center and rent a bunch of kit to start writing code on, you can just rent it effectively over the web. And so the barriers to entry are low, and there's nothing to stop some guys out of New Zealand with a great idea making enormous progress very quickly. But what that does mean is that there's lots and lots of startups all the time. And I think if there's a theme, as you start to think about how you tackle a problem, an awful lot of propositions are still automating today's processes. So if you take a difficult, clunky, crappy process and automate it, it's still underlying a difficult, crappy process. So it's how can you totally reimagine the way that people do business? So Uber is a great example of that, right? Totally reimagining the way that we order a cab and pay for a cab. There's no money changes hands. It's totally reimagining the experience. And so I have no idea what the opportunities are. I'm sure you guys are exploiting some already, but it's the true disruptors, I think, who'll make real progress.
Good stuff. Well, I think we're sort of running out of time, so I just want to thank our panel, and we'll move on to the exciting keynote speaker.